Hey guys, DJ from PTA. Want to go over the general market today. The winner for today was BVW. BWV, I'm sorry. BWV was the winner today that I played on. We mentioned SKYH, CYN, and MICT. I'm going to go over those trades as well, but moreover, I'm going to go over the winner, overall sentiment of the market, and where we're at. I mean, as you can see, we hit a low today of 394.82 in the market, well over the 410, 400 areas that we were talking about last week. So it's been an interesting ride. The market's been pulling back. So it was good to see, more than just one runner that everybody was trying to climb into today. Shout outs to everyone in the Discord that did very well. Seen some of the people posting and everything. They did phenomenal, and it was just great to see everyone doing well. So ultimately, it's one of those things where, looking back, I wish I had played SKYH. I think that was just a better trade all the way around. BWV was a little bit on the slow side, but I think it was more crowded than based on the price action, just because of the whipsawing and different things like that. But it turned out to be a decent trade. It wasn't something that you got to pick your poison. You got to pick one, stay on it, and then manage it and make your money, get in and out. What I ended up doing was I did take a look at those other stocks, but SKYH, once it got past the 840s, it was gone. So I didn't really take a look at it again. MICT was just too small of a stock as far as price. I don't play stuff under $1. I know a lot of guys out there are scalp kings and stuff like that. I like to play stuff with range, stuff like that. So I didn't feel comfortable with those stocks. CYN was a good runner. So we're going to go over all those for you. So want to go over first BWV. So BWV was coming off of a low. We had a nice move on May 3rd for that particular stock. And then we had this nice slide back. And then this jumped on the radar, knocked out this price range as far as volume, a little bit more volume. Didn't have a range as much as that day. So I was looking for a second day continuation. So this was something that a few of the guys in the chat talked about last night before we turned in, is that this one right here, BWV, was going to be on watch. Same as SKYH. I just picked BWV. I liked the push that it had first thing in the morning. So I knew that if it held that push, we might be on to something. So let's zero in on the 1 hour. So ultimately, you had this big push and then this slam. It held, and then we had this big push again. Now, when you zoom in on a 30-minute, everyone knows I like that 30-minute because it really tells you what's going on in between time. So we had this nice little pullback here that really set my parameters on waiting for the pull. So zooming in on the 5, what I began to see was something that looked like it might be going on a downtrend. Now, initially when I woke up this morning and I seen the price action, I was thinking everything. And when it got up to here and then started to pull back, and I seen that it exhausts and then it pulled back and then it wicked and then it kind of exhausts. And when I saw that, I ultimately thought, this thing's crashing. And then it just fell hard. And then right here on this candle in that 5 minutes, so let me kind of zoom in on the 1 minute so you can see. Right there is when it started to do some very interesting stuff. And you can only see this in the 1 minute. So we had this push and pull. So I kind of want to break that down for you so you can kind of understand where I'm coming from. So when I saw it do this, okay, it started to top out here, topped out here, and topped out here. I mean, that almost looked like an inverted head and shoulders. So my thought process was, it's probably gonna drop, bounce, and drop and fade for the rest of the day. That was my theory. Okay. What this stock ended up doing, which was interesting, is that after it did this, it set this area here, which lets me know that shorts were getting back in more aggressively, and then they flushed it, and then somebody just came up and brought it all back. When I saw that, I was like, that's interesting. So now I'm looking at it a little different. I'm looking at this as A, this was B, and that this was C. So I'm starting to see a pattern. And in the 1 minute, if you can look at it closely, you can see how it set up and then it started to hold. So for me, I said, well, this may be a good position, because I started to think about it more from a range, and my order was at 505. I'm sorry, 506. That's what the order got filled. I wanted 505, got me in at 506. So what happened essentially is I started to look at this zone, this B area, because remember, I wanted to get in about here. I started looking at this as a heavy zone. One, we had a rejection here, we had another rejection here, and then you had a small rejection here. So it was building some momentum to go the opposite direction. I like to get in right when it starts to curve. Right there is that C area to me. So it's like looking at a C backwards. When I start to see it curve, that's when I start, my antennas pop up and I start to get interested in the trade. So ultimately, when I saw that, that's when I said, okay, time to get filled. Got filled pretty cool. So you're talking about 10-cent risk off of support. Worst case risk was 485. So you're talking about literally, if I wanted to hold on another 10 cent, talking about 20-cent risk. That's pretty much in line with what I do. 5-10 cent risk. I think this had an ATR of like 140 something at the time. 10-cent risk. Yeah, I can do that. So I went on and took that trade. I loaded up. Loaded up pretty heavy right there. It's only a 10-cent risk. So ultimately, this stock just ripped. And when it ripped, and then it started to get over, and remember, think of it like these people got to get out. You got a whole bunch of orders at different price points, usually 10 cents, so on and so forth. So when you're looking at this and you're thinking about your orders, you got to think about where everybody's sitting. So everyone who got in, approximately right here, got a stop loss order here. They got one maybe 10 cents higher than that, 10 cents higher than that, 10 cents higher than that, so on and so forth, which causes, ultimately this type of move. So when you can imagine where everybody is sitting at because you're reading to the left of the chart, that helps you understand where to get in, where support is, so on and so forth. Now, if you take a look at this, you can see it right here that this is a key area. It pushed from this area. So it ultimately returned, and then it held. So whenever I see that, you get what I'm saying? When I can see where that stock is going, where that stock is holding up at, you gotta buy at support. Buy low, sell high. That's what you get. You gotta buy support. So a lot of guys play the breakout. They would have played it somewhere up here, or when it actually cleared and then rebound and take off. That's all good trades. Some people like that confirmation, and that's what I call a high confirmation trade. Once it breaks out and returns and then continue on, that is what you call a high confirmation trade. For me, I like buying at support. The reason for that is that's the only way that I can get a very good entry when it comes to my shares, because I like to load up. Right now, our market just is not giving you a full push We're just not seeing those type of pushes as it was back in 2021. I mean, back then you could buy the breakout. You can buy these areas because you just knew it was going to go higher, you know, because everybody was crammed in. So unfortunately, you just can't risk it. So I always try to think about where everybody's sitting, you know. So I know that people sitting here, and I know for every 10 cent, there's going to probably be some type of stop order or stop option in that area. So the key to it all is to keep in contact with yourself in the trade and understand where everyone is. So ultimately, when you see this, look at the volume. You know there's a lot of people sitting here in this area. You get what I'm saying? Look at the volume. You know there's a lot of people sitting right here in this area. So as the trade started to unfold, as you can see, it was really no volume when it fell, and then it was this big spike down, and then they recaptured it. So I was thinking it was going to continue this way. The momentum was showing that, thoughts of it was showing that, but as you can see right here off this 200 EMA, it hit it and bounced right off of it. So obviously someone wanted to load in heavy into that stock. Now, once it took off, you know, I typically take a little off. You know, once you are in the green, you know, there's nothing wrong with taking profit. So when people try to hold on and get the whole length of the move, that's pretty much being greedy, especially in this market where things are just not playing out that way. Right here and right here, when it got here, I took profit, so I got a nice little piece there. Now ultimately the stock continued, and once it ripped, it began to go back up again. Now each one of my price targets, it actually hit a price target here, and then it did a similar thing here, ripped down and then gathered real quick and then went sideways, and then it ripped again. When it did this rip, I just took it off here. Now I left my last quarter of a position in this stock right here. About 615 was the area that I ended up. Now why did I do that? Well, let's look at the chart. When you look at this chart, which you can see, I'm kind of draw it all out. Remember, this is our first area of break, so took a profit there. It went up, pulled back. It was kind of a consolidation. Went a little higher. I took a little profit there. Once it broke this area, I was watching it to see if it'll come back and retest here and continue on. It actually bounced. So here's another move, and then it went higher. Once it did all that, again, it went sideways. Kind of started to act like it was going to go down, and then it quickly rebound back. And that's what made it kind of interesting, and which made me know it wasn't sustainable. Because after it pulled back here, it jerked up, pulled, and then if you notice, that's when all the volume stepped in. So this was a low pullback on low volume. So I knew that it was going to rebound, but I didn't know how hard it was going to rebound. They didn't step up like I like. Like here, they stepped up. Here they stepped up, but they didn't step up as much as before. So I'm watching how each push is getting weaker and weaker. Whenever you see, okay, a high push here, low push, and then a high push, but you don't see a significant difference in price, meaning from top to top, when you don't see that the stock is moving much higher than where it was at. I mean, it literally only moved 28 cents from the previous top. Same with this one here. It only moved 13 cents. That's not a big push. That means it's more pulling down on the stock than it is pushing it up. So ultimately, I just was looking at how the stock was behaving, which made me think about where the areas to get in and get out. Again, so we get this push. Short sitting here, short sitting here. Now watch how the volume does. It drops. But the market didn't drop that low. It went back up, push. So I already got 1, 2, 3. I got all these tops where it's telling me this market can't do. So if you look at the overall consensus of where it's going, it makes sense to you when you're looking at that and looking at price volume. You had lower low, higher low, lower low, quick consolidation. And usually the stock will do that so that it gets prepared for the push down. You had this igniting candle that was not too far from here, from this area here, but it wasn't no big push. But that's a lot of volume for it only to go this little bit of a move. This let me know essentially that this stock is starting to exhaust itself. It's something, it just doesn't have a push. But you could see that again through all the trade, through each push. I monitor the push of the stock when it's going in my direction versus when it pushed before. It was a massive push to the upside and then they brung it back down. And then they took it sideways to try to accumulate some, and they tried to push it higher. This accumulation right here should have took it to here, but it didn't. So they tried it again. Accumulated here, trapped some shorts, and then they ripped it and couldn't get it higher. So when I see a stock do something like that in particular, where the stock is going sideways, and then they trap everybody, and then they try to rip it higher and it doesn't get to a really significant zone, not that much higher than the previous push, something to pay attention to. Because if I've trapped all these, if I went sideways to accumulate and then I faked out the shorts to take it higher, and I don't really have a push of only 28 cents than the previous high, that lets you know that there wasn't that many shorts in position right there. Wasn't that many sell stop orders. And equivalent, there wasn't enough buy orders to push it higher. So when you start to think of it like that, in the senses of the psychology of people and what they're doing in their trades, they give you that price action edge. So, you know, the indicators are all cool and all that. I use a few mainly price indicators. But for the most part, if you just pay attention to what's going on, the psychology of stuff, then that'll give you the edge. That'll help you understand what everyone else is thinking when they're placing these trades. So ultimately, I end up getting most of my shares off right here about 613 or so, simply because when it did this push down, I put my stop loss here, and then when it pull up and yank back down, I just say, you know what, let me start getting stuff loaded off. And interesting enough, I got most of my order off here, and then it just collapsed. This was a halt. It dropped too fast. And then you can see that, because ultimately you can see that right here it was creating this area here. So if you're looking at the wedge, you can see that was a descending candle, a descending triangle, I'm sorry. And that is the reason why this happened. Wasn't no buying pressure. Shorts were getting in. They didn't get squeezed really on the previous pulls. They got trapped here, but that's what pulled it up. And then they started consolidating here to go for the downward move. So when it consolidated, made a move down, pulled back up, created another higher low, that was your first signal. That was your first signal of, yeah, this stock, it might be going back down. That was your first signal. So just pay attention to the price action. That'll help you out. The next one I wanted to go over was MICT. MICT was a really good trade for those who play the penny stocks or under $1 stocks. We had a nice little push, pull back, and then another push. So it's pretty much an ABCD pattern off the daily. So that's what probably got a lot of people interested in the stock. Probably people pumping it as well. If we zero down into the 30-minute, kind of set its area, and then it pushed. You didn't really get much of a pullback from here. So when I looked at it, it had already, set its high. So I always look for that first leg. I was looking for that. Then I said, no, I'm going to play something else because, again, I don't really play stocks this cheap because typically they don't have the legs to run. Now, this one in particular did very well. Zeroing in on the 1 minute, you would have got that push-pull. But the biggest thing is watching the price action. Now, one of the interesting things about this stock was how it played out in the long term. But this is something you had to sit there and watch. So if you were in a trade first thing, you could have got in off of this consolidation and it pulled. I never really do that. I always wanted to kind of pull and see how it reversed. And then we always talk about that 945 push reversal. Right here was it. Right at 945. So a lot of traders, look or don't place trades till after that point in time because we're always looking for that reversal. We're looking for that key area that is going to reverse in, so on and so forth. This stock was interesting is that when it made its move down, created that low again, and then it stepped it up. So when I saw that step up, probably would have got in somewhere right here just so I could have had a small risk. It did a nice little push pull, and then I think once it got over pre-market high, which is here, that's when it took off. And from there, made a nice little move. So a lot of people played it here and it went to one-on-one. Nice little 22-cent move. You talking about literally worst case scenario, you talking about a risk of 3 cents. And if you just wanted to risk to the low, that would have been a risk of 2 cents, 3 cents risk for a 22-cent, about 25 cent, 27 cent gain. Not bad. That is literally, you're talking about a 2 cent risk into a 27 cent, 25 cent gain. That's a good 7-to-1 trade. And a lot of people, with the stock being as cheap as it is, you can really, really load up. Even if you was gonna sit there and say, hey, I risk 10,000, I risk $500 on that trade. Okay, great. You could have easily loaded up 20,000 shares, 30,000 shares into that. And then you figure a 22-cent gain, that's $6,600 with like a couple $100 risk. So that was a really good trade. And then, eventually it fell and collapsed. And that was it for it. So, but ultimately you could have seen that. And just looking here, you can see the area here. So when it was trying to go higher, it fell. So ultimately, just reading the price action, drawing your lines, making sure you see the chart fully and where it's at, and just pay attention to what's going on in the trade. Don't be so quick to pull the trigger because you see a green candle or a red candle or whatever it may be. It has to have a consensus. It has to have a target. You have to know where you're headed in that trade and watch the swing highs and swing lows. Next trade, which is the one I should have played. I honestly wish I had to play both of them. Was SKYH. Nice little pattern. I see here. Made a low, pop. Made a low. Higher lows. This stock is probably going to go higher. So the next green day was today. So it was on people's watch. And we had some nice volume. Let's break this down to the 30-minute. So when you're looking at this stock, you got to remember the psychology of what's going on. I see consolidation. So coming straight into the day, I'm looking at the consolidation that happened here and how it kept the higher lows. So again, you know, with me, I like to trade off of momentum, and when everybody else is going into the trade, I probably wouldn't have took a trade first thing in the morning knowing how I trade. Breaking it down to the 5-minute, this is where things got a little interesting. So again, guys, you know, you always looking for those reversals. So I'm looking at it from the 1-minute. You had your nice little reversal right here. So let's take a look at it. Remember, guys, 9:45. This is 9:45. Here go your reversal. So when I seen the reversal happen and all that, I said, okay, might be going down lower. It kind of picked back up. So again, remember when we looked at the previous chart on BWV? Remember when it went down and then got sucked up really quick? It was right around 10:15 or so was when it got sucked up really quick. I'm looking for it to go up, bounce, and go higher. Higher lows, higher swing lows. So once it did that, this would have been your entry. This is where you would have got interested in the stock. Remember, you just bounced off a 200-day moving average. You respected it again. You bounce back up into the trade, right? So this area right here is previous day high. So previous day high. That's what that yellow line represents. This one represents previous weekly high. So you got to look at what's being supported, so on and so forth. I would have got interested in the trade here. I just smacked off the 200-day moving average. I pulled up. I set a low, and then I set another low, and I'm starting to curve. When I saw that, get your entry. So you're looking at literally even if you wanted to play it safe and you're a breakout trader, you could have broke out there. That's still 15 cent. 15-cent risk. Going to the trade, it pulled up, reverse, held. So what you doing is paying attention to the psychology. Now, if I just did a push, I reverse, and then I hold, I'm going to step higher. Because there's short sitting here, and then there's buyer sitting here. So we get this push. Shorts re-shorted here. So you got these guys that jumped in with their stop losses here, and they got stop losses here like this, going all the way up, depending on their account. And then you get a push straight into that area. Hit a couple more stop losses. Okay, boom. Pull it back down. Boom. Didn't really swing. So we had some consolidation there. Then it pulled down. Again, they came back and sucked it back up. I get us a nice move up, down. There go your wrists. This is my double confirmation right here that you want to go higher. So I get the push. Again, it pushed out, pulled back, respected. And then after that, it just kept rallying. So when a stock does that, then that's when you pay attention to what's going on in the overall market. And this is how they trap everyone that's on the short side, right here. Real steep. But you can see them trying to buy it back up, buy it back up. Boom, broke over, gave me a nice consolidation from here to here. So let me draw your line here. You go your consolidation here. Then it goes higher as soon as it broke out of consolidation. So basically you had a consolidation area and then it stepped up. So it bounced, and then it couldn't bounce lower, and then it curled up. Breakout. Broke out. Respected. And then they pulled it back. And they just kind of kept doing it all day long. Same type of pattern. Every time they suck it back up, they hold it and then rip it higher. They end up going to 1063 after hours. Solid trade. You can play that trade and not get wiggled out if you're just paying to the price action. Next trade we're going to go over CYN. Very interesting. Drop from 108. It's been rallying. Here go our pullback. Now we got some continuation. Today has some pretty good volume relative to what it was the last couple of days. So let's go down to the 30-minute. So when I'm looking at the trade, you know, there was a nice little push here. So for me, the pattern's there. And this is really seeing the pattern as it folds. So people ask, well, where's the pattern? Well, we got this nice little push up. So that made that A. We got us a hold here. That made it B. This is what we call an anomaly coming into pre-market. So maybe the market dropped and they sucked it back up. Now you gotta think about this now. This is a 30-minute candle. So that means first thing this morning somebody was buying. They created another A, a smaller one, and then they created a floor, which was B, and then you had your curve. So the real entry on this was first thing in the morning when it came to this trade. First thing this morning when it came to this trade. Good push right out the gate. You literally could have probably got in 437 risking to 410, 20 cent, 25 cent risking to pre-market lows. It's a good push. Had your push, hold, I'm a risk to here, get in here when it broke out. Now let's zero it down to where I would have got in that based off price action. So we had this nice little push. Remember, I like seeing that push. And then we always talked about this. And I think a lot of people just think it's a hoax. And it's not really a hoax. I believe it's just how marketers, when they're playing and traders look at this, I think it's just the way they look at things. So you had this nice little push and then you had this reversal. Right? Then you had the reversal at 945 that we always talk about. At that point is when I would have got interested, because you already set your low, you set your high, and then you respect it. And then I can risk to here. So let me jump in here. I can risk to here, ultimate risk here. So what are we talking about here? We're talking about literally 6 cent risk, worst case 15. So if you want to load up 6 cents, put in a filler right here. You can put in a small order here, waiting for the next push. It pushed up to here. Then it reversed, came back. Still ain't come back to here, so it came back here, you would add. So you might have put in half your size here at 390 area, and then put your other half of your order here at 415, which would have put you somewhere in the middle if you load it up. So you're looking at like a 402, 403 average on just that push. So got in, excuse me for 1 second here. I think I'm on the wrong day. Yep, there we go. So you would have had that push. Same trade both days. I was actually showing you the trade from the 9th. Same trade from both days. Had the reversal. Same trade on this day. Had the reversal. 945 reversal. Pulling higher. Same exact trade. So that's what made it confusing. I just noticed that was the same trade both days. So on the 9th, you had this trade. Remember risking it here. Then fast forward it to the next day. These patterns are always consistent. Today's the 10th. On this day, same pattern. $9.45 turn. So get in here, because you got your area here, came up, wicked out, got your area here. I want to respect it, jump in here, risk to here. Okay, great. So what does that mean? Well, you could have got in here, risk to here. That's 8 cents. Could have risked to the low. That was 20 cents. And then you let her fly. From here to here was 74 cents. So if you had a risk 6 cents, 74 cents was 12 to 1 move. Get out. So then we had a nice little pull and this nice little push down. They pulled it down pretty much on low volume. It respected. So remember, you got in here, did this, took some off, boom. It respected, is going higher. Let's look at this on the 5 minute. So once it bounced, I'm looking for the bounce up, pull back, bounce up if it's going higher. It didn't do that. So it did that here, which represented going higher. So it's paying attention to price action. Look at it on the 5 minute. Had a push down, respect it, push up. The ideal way it would have went down, respected it here, and push up. It didn't. It kept going down. So we were still in that downtrend. Whereas when it was ready to go higher, it did what? Respect it, go up, push down, and then went up again. Push down, still making higher lows. Swing lows. After a while, they keep seeing that go higher. So ultimately, when it went higher, you're still getting trapped. I think the biggest thing is making sure you take a look at this from multiple time frames. So if you look at that really, really close, after it did this and ripped, this was like an igniting candle, which started the other way of the move on the 15th. So think of it like that. This green candle here at 11:15 a.m. started the rest of the move for the rest of the day. Because after that point in time, it never got lower than that candle. So that just started the move for the rest of the day. So ultimately, if you look at this from a higher time frame, you really can see it as being consolidation. So ultimately, when I see something like this, I'm like, okay, this stock is just going sideways. Just kind of consolidated. As soon as it got over, it ripped. Zooming it down into 1 minute. And sometimes when you got a bunch of clutterness like this, zoom out. Zoom out into the higher time frame so you can ultimately see what the pattern is. When I see a bunch of confusion, especially if you're seeing it from time frame to time frame, you want it to be clean. You want it to be clean and precise as to where it's going. When you see a bunch of back and forth like it did here, that lets me know that, you know, they were just accumulating, but they were doing it on the higher time frame. Because on the higher time frame, it don't look like that. Let's look at the 2 hour. It really looks clear on the 2 hour. It was still stepping higher. So when you looking at stocks and you looking at moves and you looking at which way the market is going and you can't see it in the time frame you in, take a step back into a higher time frame and keep stepping back until the picture becomes clearer. As you do so, it will make sense to you as to where the stock is going, where the stock is. And in hindsight, when you're in the actual trade, you're not thinking about all this. But this is the tips that I give, is to step back. Take your time and step back into the trade and see it from higher and higher time frames, and then it will make more and more sense. So you figure red candle, confirmation, push. So you got to look at it from the higher time frames. Keep looking back, further back till it looks clear to you, and then make your decision from there. Like, that's not clear. That's not clear. I mean, even a 1 hour is not that clear. But man, when we get to that 2 hour, it looks clean. You can see it. It makes sense. So those are the things I wanted to talk about with you guys today. If you guys have any questions, comments, leave them in the chat. Let me know. Join our Discord. People are always in there talking and asking questions, so there's a lot of great feedback in there as well. But guys, as I tell everyone, stay studying and stay focused.